They say copper day is $4.50. I think it's going to go to $10. The United States is consuming 3.6 million tons. So it needs to double the capacity it has in order to feed a smelter. It wouldn't be crazy for gold to go to 10,000, for copper to go to $10. It's not crazy, right? And the real feeding frenzy happens at the peak of the market. But I think we're 10 years away.
Ian Harris returns. He is the CEO of Copper Giant. We've had him on the show just a couple of weeks ago. Check out our last interview. Copper prices have been on a tear up and down, extreme volatility all summer. We'll talk about what's next for base metals, commodities, the global monetary system here at the Precious Metals Summit in Beaver Creek, one of the premier mining conferences in the world. Welcome back to the show, Ian. Always good to see you.
Thanks, David, and nice to be here in Beaver Creek.
Copper Giant, a lot of news coming out of the Macoa project. We'll talk about some updates for our audience. Let's talk about copper itself and the global monetary shift. You were telling me offline that deglobalization has been a recurring theme throughout the entirety of 2025 with the tariffs and the trade wars ongoing. Equities, however, have been on a tear. New all-time highs for stocks, new all-time highs for mining companies. The GDX is up 90%. And so, in a sense, it's kind of ironic, isn't it?
It shouldn't be a surprise, right? History has a way of repeating itself. And these are secular markets where we see rotation of capital. So everything is playing out that it makes sense now is the time. Our previous interviews were going, look at the commodities, the equities haven't moved yet. Yeah. It's playing up what is going on. These are the most undervalued, the bargain prices you'll ever see, right? And all of a sudden, when it starts flowing very fast. And it's hard to not point to an entire index that's up 90% and not say, why are you not investing in that? So you see big money starting to flow and things really start to take off.
Gold mining index, the GDX, outperformed every single S&P 500 sector this year by a wide margin. And people are wondering, some people are wondering whether now is the time to exit. Are we in a bubble right now? That's kind of the sentiment. A huge 180 from last year when we were talking, when are miners going to start catching up to gold and silver and copper? Remember that? Remember when the underlying metals were outperforming the stocks? Well, now it's the reverse. Now people are saying, whoops, maybe I missed a boat, or whoops, I'm in, but it's time to take profits. Are you starting to see that sentiment shift?
If people are asking that question, I hope they're a day trader.
Okay.
Right? Because obviously, I am from the generation that saw the end of a big, gigantic, my career started in one of the super bulls, even though my executive career was at the tail end of it. And then seeing a secular bear market for arguably 13 years. So we've seen this before. So if people start getting a little bit of nervous, just hit that chart and go back 2 years, 5 years, 10 years max. And you can see the valuations these companies have had historically, right? We are nowhere close. We are just on the teeniest of green sprout that can come out of these markets. Bubbles do not generate over 3 months. They take years and years to generate before they mature. And normally we don't see bubbles in our space. We just see a rotation of capital that happens over time.
I know you're an executive in the mining space, and I want to get your perspective of your side of the story. But from an investor's perspective, someone's probably looking at this situation and wondering, what was the rising tide that lifted all boats? By all boats, I mean all assets this year: gold, silver, Bitcoin, copper. We'll talk about stocks, mining stocks. All new all-time highs. At the same time, we're seeing policy uncertainty around tariffs. We're seeing inflation fears ticking up. The labor market in the U.S. showing cracks. So the underlying economy, a lot of uncertainty, a lot of headwinds there, while all assets, like I've mentioned, just on a tear. There's a little bit of a disconnect, right? Do you ever wonder to yourself why?
I think that there's a nervousness, and it's always when things start rotating, there's obviously a lot of self-doubt comes in before a true bull market is fully installed, right? So it takes time for these things to overall and generate. But if you look at the underlying fundamentals, in terms of the big mining companies, some of the ratios that they see, they're still incredible values. Comparisons of where we've been into the past, where we are today, are still incredible values. And I think that's why we're seeing a lot of volatility. It's kind of an in and out. It hasn't really settled in yet. But It's moved 90% in a blink of an eye. Next thing you know, companies are sitting at 40, two-year highs again, right? So we're starting to see all the indicators that say, because there's an argument both on the precious metal side and also on the commodity side. And one of the things you mentioned is because you're seeing a decoupling or a breakdown of the globalization. And this is the one where copper plays out the biggest. Copper has always had, everyone has been, it was on the cover of The Economist magazine. People see it. It's in their face. We need it. And guess what? It's not just energy transition and electric vehicles anymore, right? It's the power requirements, and that's what copper is all about. It's why I think one of in our first interviews, what I really get excited about is AI. I did a calculation recently where you look, who has the big checkbooks? Who's the guys who just sat down with Trump and said, we're looking to invest about $800 billion in the next, few years inside the United States. Meta was talking about doing these massive data centers. And it won the size of Manhattan in Louisiana, or I can't remember what state it was, in the southeast of the United States. If you do the calculations, the requirement in copper just for those data centers is 1 million tons of copper. 1 million tons of copper. Today, the world production is in the 20s. So just for these data centers, you need to have percentage points of the entire copper production of the world. Just for the data centers. And why I talk about it so much is because it's a race. These guys see it's a life and death race. It's a life and death race between countries and between companies. They say whoever has the smartest computer is going to win. And they don't want to lose. And those checkbooks are just going to start ripping open. Let's go, move things forward. At the same time, you have a decoupling of the globalization. So you had a China dominance, and now you have India raising its hand and go, I want to establish smelting capacity. You have the United States going, hey, I'm putting a tariff, and then by 2027, it will include refined copper. All of a sudden, it says, that's a message saying, I want smelting capacity. So if everybody needs smelting capacity at a time where there's already too much smelting capacity, it means the underlying assets are in the driver's seat. They're the biggest.
Smelting capacity everywhere?
There was a time period where smelters in China were paying to process people's concentrate, right? The treatment charge was negative for a time period. They were paying people to process their material, right? But it was about dominance of the supply chains, because once you have refined copper in your hand, those become electric motors. Those become wires. Those become things that you can transform into what the world needs right now. And if you don't have that copper, you can't have the production chain. It's why the United States came out with this massive tariff and then took a step back and said, well, it doesn't count on refined, because the obvious answer is I can't manufacture anything in the United States if I don't have the refined copper. You need to have the beginning of the production chain.
You mentioned, I think China holds 60% of smelting capacity.
That's correct.
Globally. So the U.S. is still a few years away from actually developing their own smelting ecosystem demand.
Correct.
So what's happening now?
So I think today, United States is consuming 3.6 million tons. Remember that number I just said about AI being 1 million by itself. 3.6 million tons per year, of which it imports 1.8. So it does have an existing capacity, but it's also growing dramatically. So it needs to double the capacity it has. In order to feed a smelter, you need a project.
Right.
And there's why all these assets become super valuable. And that's what we're so excited about, because there's so few assets.
Well, that ties into your company, which I'll talk about in a minute. $4.50 is the copper price. We were at $5.80 early in August when we last had you on the show. Huge moves, 20% down in one day on the...
that was the COMEX.
Yeah,
right?
that was the COMEX.
Yeah, so that was because there was an anticipated tariff. That tariff disappeared until 2027.
Right.
But if you look at the LME price, it's been pretty steady.
And so now that we've had that tariff reversal just on the COMEX, we've been hovering around $4.50 since August. Is that the fair value for you?
I think that, well, it's always a question of who controls the price. It's normally the traders. They normally have a shorter term vision, right? But there's some long-term underlying fundamentals that say things are going to go higher. And I think another proof of this is the acquisition between Anglo and Teck. I don't know if you want to touch on that really quick.
Let's do it.
But you basically have the biggest copper producers companies in the world going, it's too hard. There's no projects out there. It's hard to develop them. I can't see what we can do. And they start merging, right? They start saying, I think copper price is going to go through the roof. So what we need, the best way we can leverage ourselves to that is by merging. It creates no new production. It might even arguably reduce the amount of production, right, through efficiencies. So they're tying up the production is what they're doing. At the same time, the world needs more production. So it's an indicator. Those guys know what they're doing. They believe that copper price absolutely is going up, and they want to be in a pole position of when copper goes up, and that's how they're going to feed their valuations.
This is supposedly the second largest mining merger ever. What does that imply, though? If I were a company and I know that there's a strategic future for my company that I'm going to come out on head, I wouldn't want to merge with somebody, right? Are they doing this out of...
Scale means everything, right? When you're talking about China wants feed, India wants feed, United States wants feed, arguably Saudi Arabia wants feed. They all want to build a smelting capacity up because they know that copper is the basis of so much of the future production chains, because the world is going to be based on electricity. Energy and power are going to be everything, and that's what they need, that copper to build that infrastructure. And you go, I want to be in the position of where I'm negotiating that. So you size and scale, and who can be the big players can negotiate the best positions. I think that is a big part of it, because the only other option they have is through growth, and there's no projects.
When two giants merge like this, what typically comes next? What do they do next?
Well, first of all, there's obviously an efficiency, but I think that they're just doing it because it's the easiest way to show we're going to grow through future price increase. They say copper day is $4.50. I think it's going to go to $10. The lowest risk method of doing that is to merge, right? And there might be some efficiencies. That used to be the old way of doing it. But for me, it is just about acquiring size. Acquiring those copper assets, having the portfolio was a whole lot easier than discovering them.
Why couldn't they? Well, I suppose that's on the agenda, maybe, but wouldn't they just buy companies like yourself? Wouldn't that also help them?
That they are still seeing it as the lowest risk pathway is just to acquire the production, right? Because it's in hand. It's something you can do, and you can just have it on hand. But that feeding frenzy one day will end, because at the end of the day, you want underlying assets. So after producing assets, it's assets that can produce in a short period of time.
Yeah. What are governments around the world doing to address this supply chain bottleneck that we've been talking about?
Well, it's definitely, even... So I started working in South America in 1999 and worked all over the place in South America. And for the first time ever, had the U.S. Embassy call me up and say, hey, we'd like to meet. We'd like to know more about your company. Right? First time ever. Like, I've talked to the Canadian Embassy a bunch of times because we're a Canadian company, but never the U.S. Embassy. They're already trying to put their fingers and try to understand what the future projects look like. There is an outreach going on right now. I think step one is have the smelting capacity, but after part two of that is make sure you have the offtake. Know where the supply is coming from to feed that smelting capacity, because that's what everybody needs. Everybody wants.
The U.S., the Pentagon, the Defense Department recently acquired critical minerals companies in the U.S. People are talking about the nationalization of critical mineral companies. Is that on the horizon?
Well, you can see as a minimum, nations are playing a much more proactive role in acquiring the production chains. In the past, nationalization was different. It was about economics. It was about money. It was about controlling your national resources. In this case, I think it's all about securing production chains. If I were going to tell you that there's only one race that matters, and it's AI, and if you lose, you're dead. All right? Everyone would be going of securing everything you need to make sure you can win that race. And it's about power, and power means copper. Having the energy supply and the chip supply to be able to build that infrastructure out as fast as possible. And you're seeing it happen right in front of our face.
You've compared copper in this regard to platinum, palladium, other precious metals. Why is copper and those other metals needed for the AI arms race? Just, concrete examples. What is it?
The answer is simple. All electricity, almost all of it at low voltages, is transmitted on copper. All of it, right? The only other more efficient metal at transmitting electricity is silver, but you're not going to have silver wires in your house, right? So if you want to transmit electricity efficiently, it's through copper at lower voltages. So all the distribution of electricity is copper, right? Plus you have cooling and there's some other effects, but most of it's about getting the energy required to feed those brains in those data centers, feeding them and getting the electricity to them. It's number one, and it's all about copper.
We don't have the current infrastructure is not sufficient to grow the AI.
Definitely not. No. So you could see when I think it was Microsoft said, I want to buy the nuclear reactor at 3 Mile Island.
Yeah.
Because they said we don't have enough energy to feed our data centers. So it's a world race now to get in new energy supply, transmit that new energy supply, and build out those those.
Where do you see most of the copper coming from in the next 5 years?
Well, you could say that 50% of the world's largest copper mines are from Chile to Panama in one Andes region. So the good guess is 50% of that new copper is going to be coming out of the most prolific zone in the entire world. Yeah. And so that's where we fit in. So my history was the construction of the Mirador project. Back in the days of Corriente, it was the first industrial scale project in the history of Ecuador in the Jurassic Belt. It's why I said I want another project in that Jurassic Belt. Colombia has a more robust mining sector. And this can be a big project, near surface, near infrastructure, has power lines, has roads, no one's living there. I can see how this project can get into production quickly, right? And so that is it's not 1,000 meters underground. You have projects like Resolution in the United States finally maybe going forward. Trump tweeting about it, that you can't have judges getting in our way. Let's get this thing moving. But Resolution is so deep. It will be 7 years before you even start producing out of it. So the projects like Macoa, I say it's a unicorn in a suit. They don't exist. Size, scale, grade, and getting into production, near infrastructure, etc. Mirador project, which was me in Ecuador, was one of the lowest cost, if not the lowest cost, new copper supply greenfields project in the world. In my opinion, Macoa is even better because we had to build a power supply. We had to bring in power lines. We had to build power generation, run-of-river power projects. We had to build the warehouse at the port. We don't have to do any of that at Macoa. And so I see it as being the perfect project. And on top of it, Colombia is a non-major NATO ally of the United States. Same level as Japan, same level as Australia. So it's already within that working relationship with the United States. It's a perfect location to have a new copper project.
There's a presidential election in Colombia where Macoa is based next year. How do you expect policy shifts to impact your operations?
We see a shift overall going on in South America, going back to the right. Right? You have Colombia by itself, 50% of its exports are oil and coal. Right? They are not the soup du jour of what everybody was looking for going into the future. So as a minimum, they're industries that will be shrinking based on policy or just based on demand, right? So they need to develop new economic impulses for the country. So I think just logically, we're going to see a shift where we're going to see more emphasis. And that's a part of my strategy. There's only been about 5 or 6 big copper projects built in the last 10 years. And I would argue every single one of them was an underdog story. I think as a majority of the time, market misses it. They don't get it right. They love the Pascalamas in the world that never got built, right? They hated Cobre Panama, was never going to get built. It got built. Another one I like is Las Bambas, never going to get built, got built. Mirador, never going to get built. Got built. Even the projects in Africa that got built, they were never going to get built. Yeah. There's the ones that get built by groups that know how to navigate through that. I see a window opening up because we have new presidential elections. You're going to have presidents going to come. I want to see investment. I want to see big projects. And we want to be ready with Macoa saying, this is a project that can bring in billions of dollars of investment into Colombia in a time it needs it and get it through the window.
Well, you said Macoa is a unicorn. That's what you said earlier. So, with all due respect, Ian, I hear that a lot of trade shows like this. What makes Macoa different?
I think in copper, first of all, there's very few unconnected projects that are not connected already to a major of the size and scale that Macoa has. And the demonstration, we've been able to say this is the potential it has. 2, it's near to the surface. Most other projects are deep underground. 3, it's near infrastructure. So it's near to power lines and near to road. It can get to ports. It can get anything that Normally, it's not necessarily the cost of the mine, but it's the cost of the infrastructure you have to put in to get it there, right? And I would say fourth would be grade. It has good, solid grades that would be economic. And even at today, I don't need $9 copper to make an economic project. It's a project that would look attractive right now. And there is very.
I talked to a lot of mining companies that, like you, have built their own power lines, their own grid. It occurs to me that you could almost be your own utility company. Has that ever occurred to you?
Well, many of the times you're becoming your own private power producer. I mean, that does happen.
Yeah, can't you supply power to the local grid?
It's about risk.
Yeah.
Remember, there was a time because of globalization. In the past, you look at Anaconda. Anaconda used to say it was like copper to your door or something like that. So they managed the entire production stream. They had the mines, they had the smelters, they had the refineries, they produced the copper products, and they sold you the copper doorknob that went to your day and the copper wire that went to your house, right? But as projects became more complex, you don't want to say, I need a smelter and a mine, both to be successful. If one fails, the whole project dies. So you started decoupling all these additional risks, right? So permitting a mine is difficult. Permitting a mine and a hydroelectric project, even more difficult. A hydroelectric project and a smelter and a mine, extremely difficult because you're multiplying those risks. Even if each one is 90%, 90 times 90 times 90, you start to get to the 70% probability ranges. It multiplies your risk of a project. So that's why it's been decoupled. And that's why you don't want to have to do it, because you don't want to have to permit something additional like a power line.
Speaking of permitting, what suggestions would you give North American governments in particular to perhaps expedite the process or make it easier for companies?
Well, I think the politicians at the end of the day only care about votes, right? So it doesn't matter what you tell them, right? My message would be to the executives. If you want to build a project that's successful, what worked in Cobre Panama? Because Ernie is a director, right? I was in Ecuador and Mirador. And I call it the triangle of strength. You start with massively strong relationships locally from the very beginning. From the very beginning, you start with amazing relationships. Not do they like you or not, right? Don't create, we built a lot of look at all these nice pictures we took. Creating real relationships. It's why I live in Colombia. I'm fluent in Spanish. It's why I go down to the project, because those relationships need to be built and they need to be real, where people feel they're part of a project. So then what happens is, and second is reputation. So the big thing that happened to us this year is the second year in a row, and the reputation index, we were voted 12th, 13th this year, 12th last year. And by the way, we were the only exploration company on the list in terms of reputation. All the rest were producers. So we've built a reputation early, even though we're just an explorer within the country. We've built a national reputation.
How did you do that?
Well, through the good work that we've done, and people just see it and they hear about it, and through reputationally, you start building a solid reputation. It also helps that I do interviews and I'm on TV and I can do et cetera, et cetera. It helps because I speak the language.
What does a company with a bad reputation look like, just to give perspective to the audience?
You normally doesn't see it until the time and a point where they want to do something.
Yeah.
And then there's protests, there's problems, they can't solve them. Now listen, every single project normally is going to face those types of problems.
Sure.
It's how they address them and how they manage them is what's most important. So if you build a reputation, a relationship locally, and you start to build a reputation nationally, what does it build? It builds political will.
Right.
Then politicians want your project to go forward because they want to be associated with good projects. They want people to be seen that I'm supporting what people already like. So it's more in our hands. I think that we have more that we can do than people think we can.
So let's say copper goes to $10. All right, let's just suppose. And then everything doubles in price because copper is in everything. And then everyone is complaining about inflation, and then politicians want to control inflation. They do all sorts of things with the money supply. What do you say to the governments then?
Well, I think it's going to happen naturally.
Yeah.
I don't think I need to tell them anything.
Right, okay.
They're going to do it anyways, right? But they normally react too late. These projects historically take, in the United States, it's like 20 years to permit a project.
Yeah.
So you need to have projects that are further enough advanced that are in the permitting stage anyways, but they're there and then they could just fast track the permits. But we really need the help over a longer extended period of time. So we have to do that ourselves.
What are industries doing to, I guess, not manage the price per se, but try to control the price so that it's steady and not out of control? I mean, if I were Samsung, I don't want $10 copper, right?
I don't think that it's the highest thing on their list.
Right.
It might get there, but right now they're fighting enough fires, and the number one fire is who's going to win the AI race.
Yeah.
I think that is the number one priority of the majority of tech companies, right? Because you would look in the past of the AI bubble, the internet bubble, and you were saying Walmart didn't say, internet is kind of a nice way to sell another 10% more products, and they didn't know that this company called Amazon was going to come along. But I think people now realize that this next evolution is, life or death, right? That you must have AI, otherwise you're not going to survive, right? They see it that way.
Do you see mines where deposits like yours on the balance sheets of tech companies?
I think yes. It might not be as direct. It might be as an offtake agreement. It might be in some sort of other vehicle. But you can see that when Microsoft, or it might have been Google, whoever was on 3 Mile Island, I'm sorry I'm missing who it was, right? When they're going, I'm willing to buy a nuclear power plant. So they obviously don't care what their people are going to say about the assets they own, right? All they care about is the ability to continue to grow.
Yeah, I think Tesla was floating the idea of buying lithium deposits.
I had an old theory that said one of the reasons that Elon Musk bought X, one of the reasons was I need to eventually buy mines, and I need now a marketing department that convinces people that it's okay, because every time he wanted to go into it, right, he's got $1 trillion market cap. You're losing 1%, you lose $10 billion, sure, right? So you need to be ahead of it and have this marketing arm that convinces people this is okay and this is normal. I think he was a little bit of visionary. I don't think that was the reason he did it, but it might have been on his top 5 reasons to do it.
So gold and silver, new all-time highs. Silver, $40 an ounce. That's a high we haven't seen since 2011. How is that impacting the copper industry?
So there's a mix, right? You have the people that have always been in the sector, and everything shifts to gold and silver, and so it pulls away from some of the other commodities. But I think we're also seeing new money coming in. I hear conversations now of institutions that are generalist institutions that now want to invest, now are looking at projects to invest in. So you're starting to see a transition. The other thing, as things start floating, market caps start becoming bigger. You have companies that used to be worth 50 million, now are 150 million, and now they're passing through thresholds that start seeing more institutional investment coming into them. So you're seeing new money flow in, and that's why, and they normally say gold leads all equity gold markets in the mining space, right? Because they pull money everywhere.
Institutions, family offices.
Period, anywhere, right?
Are you seeing the shareholder structure of your company change at all in the last year?
We do have a service where we reconciliate all anonymous trading, and we're seeing about 30% of our volume coming in from the United States right now. So we're seeing a much bigger uptick, and that is definitely more generalist institutions, small family offices, everything else, pulling money into the sector. So we see that flow happen.
Well, I know it's still day one of the conference, but have you been, meeting with investors? What kind of questions have they been asking you?
It's still very, very early, right? I think everybody is asking for opinions. Definitely everybody's trying to figure out what's going on, but the FOMO has changed, right? Or FOMO has started to take place, right? Yeah. In the past I remember the old days, oh my God, it's terrible. It's absolutely awful. 2022, it's absolutely awful. Like, it can't get any worse, can it? Oh, it can get worse, right? There was that dread that things could get even worse. Right? Then I remember maybe like 2024, last year, this is definitely a bottom, guys. This is awesome. We survived. Things are going to get better, right? There was a pure confidence that things are going to get better. Now there is a pure fear that people are going to miss out on huge opportunities. Because you could argue, you already missed out. A lot of people already missed out on 90% gain, right? Yeah. That should have been blatantly obvious. If we look back and say why, it's pretty, well, how did we miss that one, right?
Well, besides the Anglo and Tech merger, people everywhere are waiting for mergers to the mid-tier sector, mid-tier scale, junior scale.
think you're seeing it. I think people, they want more and more to convince, but there's some early adopters and late adopters, right? You've seen a consolidation now. There used to be 13 big silver producers. Now there's only 10. Yeah. There's already consolidation going on.
Well, there wasn't a big buyout rush last year when gold was at $2,000. There wasn't a big buyout rush at $3,000. Now we're at 3,600 gold.
You see, it's still again, but it's still in emergers. Still, it's mostly producers joining together forces. Again, because I still think CEOs see this as the lowest path to the least risk, right? But once that frenzy is over, right, the underlying assets are what are most valuable.
I mean, look, I'm not saying that's what they should have done, but I'm just saying if I were the executive of Newmont or some other big company, Barrick, I'm thinking to myself, I could have bought some deposits when gold was at 2,000. Those would have been up NAV 50% by now. You know, surely they're doing some
They have a tendency always to buy assets when commodities prices are absolutely at their peak.
Well, how do you evaluate that? I mean, at what point is it too expensive to get back in? At what point is it like, okay, now we have to make a move, right?
I think that if you look at the last bulls, you could argue that people are shocked that gold has gone to 3,000.
Right.
Broken way past 3,000. Silver has busted through $40. That copper is $4.50 really is mind-blowing when you think about it. But if you look at the last super cycles, it wouldn't be crazy for gold to go to 10,000, for copper to go to $10. It's not crazy, right? And the real feeding frenzy happens at the peak of the market. But I think we're 10 years away.
There's no substitute for copper, Ian. I mean, once it gets to $10, when people...
There's absolutely substitution.
Yeah.
Right? But you have two options. Aluminum, which is less efficient, which is big problem. Right. And inefficiency means heat. So you're saying, I'm willing to accept a problem. Also, it oxidizes and can burn up, right? So it's the reason why you do not want aluminum wiring in your house. Yeah. There is a time, it's one of the, when the inspector comes in, he's one of the things he's supposed to check, because aluminum wire means your house is going to burn down. Right. So you don't want aluminum wiring, right? So there's some things that this cannot give. And there's so much growth that I don't think it's very important. On top of it, you have entire production chains that are built around it, and it's really hard to transfer to aluminum. The other alternative is silver, but it's $40 an ounce.
Yeah, it's
not even a pound an ounce.
It's a curious thing because the equities have run up so much, while copper, often seen as a barometer for global growth, because copper coincides with demand for construction, new housing and whatnot. That's gone up a lot this year, but it's still relatively flat compared to, tech stocks.
The last gigantic bull in copper was China.
Right.
The growth of China. Right. Yeah. And I think most people would be shocked that 95% of all copper still goes to traditional uses, which means electrification of the planet. Mm-hmm. And the other place to take India from where it is today to the world average of copper use per person, right, I think is 3.5 million tons of copper. Sure. So India, the whole world now is going through that transition, both in terms of electrical needs, and the whole world is converting its economies to electricity and power generation.
I was wondering if copper is indirectly signaling that the S&P is perhaps overvalued because, like I said, it's not running up as much as some of the other sectors. It's a barometer for growth. Growth isn't catching up with valuations.
I think you could say that there's a lot of people say follow the money, right? When you have peak overvaluations in the overall stock markets, money will start looking at other places to rotate.
Sure.
And when you see other places that are doing well, such as the DDX, there's a place that money can flow into, right? And the underlying fundamentals of copper are undeniable. Yeah. You've seen massive investments into exploration, no discoveries. You haven't really seen any new projects. There's no new greenfields projects coming online. You see a consolidation within the space because people are production at any costs kind of thing. And it's a kind of a perfect setup of what it looks like and where it should go. So it makes sense. It's a question of when will that movement really start to happen? But I don't think there's much question of if.
So finally, what's next for Copper Giant and Macoa?
Well, for me, we've done so much. We've de-risked the project, got it restarted, put in the infrastructure. We're in the Fiore group. Frank Juster really supporting the project. We brought in Mark Gibson, who is world-renowned geologist that came out of Ivanhoe Electric, but also has experience in Colombia. It's attracting the best talent because people, I think, realize the quality of project that we have. For me, I think we've already hit so many catalysts. We're just waiting for a little bit of momentum within the copper space to accelerate. My goal is to make sure that we have a PEA done by the time we have a new president in Colombia, so that I have a legitimate project that could say, this is what you need to put your attention to, Mr. President. This is a project you can get your back behind and bring in significant investment into your country.
Okay, great. We'll follow the story link down below to stay up to date with Copper Giant. Thanks so much, Ian. Appreciate it.
Thanks, David.
Thank you for watching. Don't forget to like and subscribe.